Hi, in this class, I will explain issue of shares. So to issue shares to the public, every company need to issue prospectus. So a prospectus is a document which contains detailed information about the company. It contains the financials of last few years. It give information about the business of the company. The prospectus also give the risks which the company may face and what are the future prospects of the company. The prospectus also give information about the competitor of the company and some ratios of the companies vis-a-vis its competitors. So for example, the prospectus will also mention the price earning ratios and return on capital achieved by the company in the last few years. So once the prospectus is issued, so then company can raise money from the public. The company has an option, either it can get the whole amount of the share issued at the time of application, or it can receive that amount from the public in installment. So if company decide to receive the amount in installment, it can receive some amount at application, some amount at allotment, some amount on call 1, some amount on call 2, and so on. So minimum 5% of the face value should be asked at the time of application, and call amount cannot be 25% of the face value of the shares. So company should receive minimum 90% of the subscription of the issued amount. Only then it will be able to allot the share to the public. Otherwise, the company will have to refund the whole amount back to the public. The company can issue the share at par. So at par is at the face value of the shares. So if a share is a face value of 10 rupees, so the share can be issued to the public at 10 rupees, or the company can issue it at a premium. So at a premium means the company can issue the share at a higher price. So 10 rupees share can be issued at 20 rupees. So generally there is a goodwill and the brand name of the company which is included in the share price, and for that the company generally asks share premium. So most of the shares currently issued are issued at a premium. Similarly, most of the current issues ask the public to pay the full amount only at the time of application. So now let's learn how to treat that issue of shares in accounting. So when we receive application money, we have received the money in the bank. So we debit the bank account because we have received the money, and then we credit the share application account. And then in narration, we write amount received on application on issue of X number of share at the rate of X per share. So if minimum subscription is received and all other formalities are completed by the directors, they can go ahead with the allotment of share. At the time of the allotment, we pass a few journal entries. So first entry would be, we'll transfer the share application money to share capital account. So share application account debited to share capital account. And in narration, we'll write application money received on XX share transferred to share capital on allotment of shares. Then if we have got an oversubscription, so we have get application for more number of shares than actually we issued, so we'll have to refund that application money. So at the time of the refund of the application money, we'll pass this journal entry, share application account debited to bank account, because money is going out, so we'll credit the bank account. And in narration, we'll write application money on XX shares refunded for rejected applications. Then we'll pass the entry for allotment money which we'll have to receive. So the allotment money is due at the time of allotment, and will pass this entry to make that amount due in our account, and later on we can receive that amount in the bank account. So at the time of due of allotment, I will pass this journal entry: share allotment account debited to share capital account, allotment money due on XX shares at the rate of XX shares. So when we receive allotment money, we'll pass the following journal entry. So we have received the money in the bank, so bank account will be debited and share allotment account will be credited to share allotment account. So allotment money received will write in the narration. For call due amount, we'll pass the following entry. So share call account debited to share capital account, and in the narration we'll write call money due on XX share at the rate of XX per share. So again, for calls, only 25% of the face value can be called in each call, not more than that. So at the time of receipt of call money, we'll pass the following entry because we have received the money, so bank account will be debited and to share call account. So call money received. Sometimes we also receive excess money at the time of application, and we can adjust that money for allotment. So at the time we can pass the following journal entry: the share application money debited to share allotment money. So those shareholder will not have to pay money at the time of the allotment.